Hello friends, Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to explain why I believe Micron is becoming the next Nvidia. Specifically, I will explain why I believe Micron will eventually double to over 2 trillion in market value in the coming quarters. To give you some context, I made a video 3 months ago when Micron's market value was still 500 billion. In that video, I predicted that Micron would quickly grow to over 1 trillion in market value. That prediction has turned out to be correct. At the time of recording this video, Micron's market value has already more than doubled to slightly over 1 trillion in less than 3 months. The important question right now is whether Micron stock can continue to grow exponentially and double again from here. So throughout this video, I will explain why the market will eventually re-rate Micron much higher in the coming quarters, why I believe Micron is no longer a highly cyclical commodity memory company, and why Micron has already become a mission-critical AI infrastructure company similar to Nvidia, AMD, and Intel. So if you like this video and want to support our channel, make sure to check out my Patreon blog in the video description below. Our goal is to help our members become multi-millionaires through intelligent, disciplined investing. Once you become a premium member, you'll be able to follow all my latest stock trades and portfolio rebalancing. You will also get access to my latest intrinsic valuation models for all the stocks I'm analyzing, so you can see when a stock becomes undervalued, fairly valued, or overvalued. On top of that, you will receive my latest stock ratings, exclusive premium content, and access to our Patreon-only Intelligent Investor Discord community. The Patreon link is in the video description below. Make sure to check it out. Before I start, let me show you a recent interview with Micron CEO. He essentially explained that memory has become a mission-critical strategic asset.
Micron is firing on all cylinders. It is based on the value of memory. Memory has become today a key enabler in AI era, from data center to edge, from servers to smartphones to PCs to automobiles, industrial and consumer applications. Every AI system, regardless of the device it is in, requires more memory at higher performance in order to really bring out the full potential of AI capabilities. So, of course, memory has always been valuable in the past, but the value of memory is not like it ever was. It's continuing to increase. Memory today has really become essential. Its role in the AI ecosystem is elevated. And you know, Jem, AI is in very early innings. Right. There is a lot of opportunity ahead for our customers to transform the world with their solutions, drive economic growth globally. It all needs memory. So the demand trends are long-term, secular, right, strong demand trends. Supply, we have talked about the constraints, and that environment of demand and supply is such that we see it going beyond tightness, going beyond 2027.
Well, you use the keyword secular growth.
Moving on, let me show you some of the most important takeaways from Micron's recent earnings report. These highlights show that Micron has already become a mission-critical AI infrastructure company. Its business model has fundamentally changed. Micron will become much less cyclical going forward, while its margins will become much higher than previous memory peak cycles. This is because AI memory demand is expected to continue exceeding supply well beyond 2027, even after the new memory fabs and capacity expansions start to come online in the second half of 2027 and throughout 2028. Moreover, Micron is expected to continue signing more long-term strategic customer agreements or SCAs in the coming quarters. These agreements will provide Micron much better value and demand visibility over the next 5 years. This is why I believe Micron will continue to be re-rated higher in the coming quarters. Management said this.
We are pleased to announce that we have completed 16 SCAs with customers across the data center, consumer, and auto market segments. These SCAs accelerate the transformation of our business model, enhance partnership in technology and innovation, and provide customers with contracted supply assurance. Typically, these agreements have a 5-year term from calendar 2026 through the end of calendar 2030. Automotive agreements generally have a 3-year term. The 16 signed agreements represent roughly 20% of our DRAM volume and a third of our NAND volume over this period. These SCAs include 4 very large customers and 3 medium-sized customers. The remaining agreements relate to smaller customers from the automotive industry and represent our commitment to the important sector. When completed, we expect approximately half or more of our company revenue to be under these SCAs with customers across end markets. Our customer value are U.S. supply plans, and this is reflected in our SCAs. These SCAs are structured as take-or-pay agreements with binding commitments to purchase specific volumes over this multi-year term. The largest agreements generally have a ceiling price for existing products at the current CQ2 market price and a floor price through the term of this agreement. Several SCAs, which account for a modest portion of the SCA-related revenue, include either fixed prices or have no price bands associated with them, where pricing will be subject to market conditions. When all planned SCAs are executed, agreements with either fixed prices or price ceilings at or close to current CQ2 market prices are expected to be approximately 40% of our revenue. For SCAs which do contain such price bands, pricing is designed to stay within this floor to ceiling level through the course of the term. This pricing visibility will help our SCA customers across market segments to better manage their business and grow their demand. For our SCAs with price bands, the floor price enables a very robust gross margin for Micron, well above our peak quarterly margins in any past cycle. 14 of the 16 SCAs that we have signed have a cumulative revenue at minimum price per our contracts of approximately $100 billion over the remaining agreement term. They also strengthen our long-term financial performance, margins, and free cash flow expectations with higher visibility and improved stability in our business performance. Under the SCAs we have signed so far, we project to receive cash deposits and related financial commitments of $22 billion. This further demonstrates customer commitment to this new business model.
Let's review Micron's recent financial results. I will show you why I believe Micron is becoming the next Nvidia. First of all, if you compare Micron's latest financial results to Nvidia's, you will notice that Micron has become one of the most profitable companies in the AI semiconductor industry and is expected to grow faster than Nvidia over the next several quarters. For example, in the most recent quarter, Micron generated approximately $41 billion in revenue, representing a 346% year-over-year growth. Micron's gross margin also reached a new record high of 85%. This is even higher than Nvidia's recent gross margin of 75%. Moreover, Micron's operating margin expanded to 81%. This also exceeds Nvidia's recent operating margin of roughly 66%. In addition, Micron generated approximately $17.56 billion in free cash flow during the quarter alone. If Micron can maintain the same margins or higher, its annual free cash flow will likely exceed $70 billion by next year. That will make Micron as profitable as Nvidia, Google, Apple, Microsoft, and Meta. Micron typically separates its revenue into two core memory technologies, DRAM and NAND. In the most recent quarter, DRAM revenue grew 343% year-over-year, while NAND revenue increased 361% year-over-year. Here's the most important part you should know. It helps explain why I believe Micron will continue to have very high revenue growth rates and generate significantly high profits in the coming quarters. In the most recent quarter, Micron's huge revenue growth was driven primarily by much higher DRAM and NAND pricing. According to Micron, DRAM average selling prices or ASPs increased in the low 60% range quarter over quarter, while NAND ASPs increased in the mid 80% range quarter over quarter. On the other hand, Micron only increased its DRAM bit shipments by a low single-digit percentage quarter over quarter and increased its NAND bit shipments by a mid-single-digit percentage quarter over quarter. In other words, the majority of Micron's revenue growth came from much higher memory prices rather than higher memory bit shipments. This only happens when we're in a huge memory shortage where memory demand continues to exceed available supply. As long as memory demand continues to be much higher than supply, memory prices will remain high at least until 2028 or even through 2030. Now, what about Micron's outlook and guidance? According to management, Micron expects fiscal Q4 capex to reach approximately $10 billion, which will bring the company's total fiscal 2026 capex to around $26 billion. Looking ahead, management indicated that quarterly capex in fiscal 2027 is expected to be above fiscal Q4 2026 levels. This means Micron's total fiscal 2027 capex will likely exceed $40 billion. This huge increase in capex suggests that Micron's revenue and profits will likely be much higher over the next 3 to 5 years. Typically, Micron will only commit tens of billions of dollars in annual capex if it had strong visibility into future revenue and memory demand, and if its customers already pre-order large volumes of memory products such as HBM, server DRAM, and enterprise SSDs. For the next quarter, Micron expects revenue to reach approximately $50 billion, while gross margin is expected to improve to around 86%. Based on this guidance, Micron's fiscal 2026 revenue will likely reach $130 billion or more. Now, to put that into perspective, Nvidia's annual revenue had reached around $130 billion in fiscal 2025. During that time, Nvidia's market cap had already reached $3 trillion, while Micron's current market cap is only around $1 trillion. This huge valuation gap is one of the main reasons why I believe Micron is significantly undervalued. Now, let's talk about Micron's financials and revenue forecast. Before I do that, let me show you this investing research platform called rankingstock.com. I always use it to research all my stocks, find their intrinsic values, compare their stock valuations, and find their long-term expected growth rates. Let me give you a recent example. By using rankingstock.com, I actually discovered that Micron was significantly undervalued several months ago. In fact, I started buying Micron stock when its market value was still below $500 billion. Since then, Micron has become one of my largest holdings. If you would like to try this platform for yourself, just go to rankingstock.com. We currently offer a 7-day free trial, so make sure to check it out. Let's go back to Micron. One of the biggest risks and the main bear thesis for Micron is that it is still viewed as a highly cyclical memory company that sells commodity memory chips. Micron has gone through many boom and bust cycles over the past several decades. For example, over the past 10 years, you can see that Micron's revenue and operating income have fluctuated a lot. During boom cycles, Micron tends to have very strong revenue growth and earn huge profits. However, during downturns, when the industry has too much memory capacity, Micron's growth rates and margins can turn negative. For example, during the 2023 downturn, Micron lost billions of dollars because memory supply significantly exceeded memory demand. That was before AI started driving a massive increase in demand for DRAM and NAND storage. Similarly, if you look at Micron's historical margins, you can see that the company generated very high gross margins, operating margins, and free cash flow margins during boom cycles. However, those margins will often decline significantly and even turn negative during downturns. And if you look at Micron's historical cash flows, you can see the same pattern. During boom cycles, Micron tends to have very strong positive free cash flows. However, during downturns, Micron's free cash flows could turn negative when memory prices are too low. This extreme cyclicality is why the market is still giving Micron a very low forward P multiple, while other semiconductor companies have much higher multiples. The market still views Micron as a highly cyclical commodity memory business, just like the past. Also, many AI bears believe that Micron's margins will eventually return to historical levels once memory prices start to decline or once Micron, Samsung, and SK Hynix build too much capacity after 2028. I believe this bear thesis is completely wrong. The market does not understand that AI has fundamentally changed Micron's business model and its long-term agreements with customers. Let me explain why here. There are 5 reasons to why I'm very bullish on Micron and why I believe Micron will eventually reach a market value of over $2 trillion. First, memory, especially HBM, is no longer a commodity. Memory has become a strategic asset. Why? It's because memory is essential for all types of AI applications, frontier AI models and AI systems. Second, memory prices will likely remain high well beyond 2028 because demand for memory is expected to continue exceeding supply over the next 3 to 5 years. Third, Micron is expected to become much less cyclical and much more stable going forward. Because of its 16+ strategic customer agreements or SCAs. These long-term agreements will reduce the peaks and troughs of traditional memory cycles. More importantly, they will provide Micron with significantly greater revenue and demand visibility over the long term. Fourth, the big 3 DRAM makers, Micron, Samsung, and SK Hynix, are expected to earn some of the highest profits in the semiconductor industry over the next 5 years, because AI inferencing and agentic AI workloads will need significantly more DRAM and NAND. And fifth, at the time of making this video, Micron's forward PE is still well below 7. Micron will need to be re-rated much higher because it has already become a mission-critical AI infrastructure company. Let's go through these reasons in detail. First, in the age of AI, memory is no longer a commodity. It has become a strategic asset. Why? It's because AI inferencing and agentic AI workloads require significantly more DRAM and NAND than traditional computing workloads. Micron's HBM, server DRAM, SOCAMM, and NAND are essential for supporting AI inferencing and agentic AI workloads. More high-performance memory actually increases model intelligence and capabilities. As AI models become larger and more sophisticated, they require significantly greater memory capacity and bandwidth to process data efficiently and manage growing KV cache across the entire memory stack, from HBM memory to server DRAM and all the way down to enterprise SSDs. At the same time, AI applications generate enormous amounts of data that must be stored, retrieved, and processed. This secular trend increases the demand for memory and storage even more. As a result, AI inferencing and agentic AI workloads are becoming the largest growth drivers for the memory industry. AI is fundamentally changing Micron's business model. More importantly, we're still in the very early innings of AI adoption. For example, physical AI, including humanoid robots and autonomous driving vehicles, will require significantly more memory and storage going forward. Most investors do not know this. During the AI training phase, raw compute is the most important factor and it's often the biggest bottleneck. However, for AI inferencing and agentic AI workloads, memory becomes the biggest bottleneck especially during the inference decode stage. For example, if you look at this research published by Meta, you can see that raw compute, model size, scale, and networking are the most important factors during LLM training. However, during LLM inference, especially the decode stage, memory bandwidth, memory capacity, and memory latency become much more important. What this means is that memory has become the biggest bottleneck in AI inferencing and agentic AI workloads. More importantly, the AI inferencing market is expected to become much larger than the AI training market. Why? It's because AI training only happens periodically whenever AI companies build and update their AI models. However, AI inferencing happens all the time whenever users use AI applications such as ChatGPT, Codex, Google Gemini, Google's AI Overview, Cloud Code, and countless other AI applications. The AI model makers and hyperscalers do not earn revenue from AI training itself. Instead, inferencing is where they can monetize their AI investments by serving millions of users and enterprise customers at scale. Without enough memory capacity and bandwidth, especially HBM, GPUs can sit idle and become underutilized because they have to wait for data, model weights, and KV cache to be retrieved from memory, especially during the inference decode stage. Also, as AI models become larger, context windows expand, reasoning workloads become much more complex, and KV cache grow dramatically. The demand for HBM, server DRAM, SOCAMP, LPDDR, and even NAND storage will continue to increase significantly. This is why memory has become the biggest bottleneck in AI, especially in AI inferencing and agentic AI workloads. Additionally, memory is no longer a commodity, especially HBM, which sits right next to the GPU. In the past, HBM was very similar and interchangeable among the big three DRAM makers, Micron, Samsung, and SK Hynix. However, starting with HBM4, the industry is moving toward a much more customized and co-designed approach. Future generations of HBM will be co-developed with chip makers such as Nvidia, AMD, Google, Broadcom, Amazon, Microsoft, and Meta. They are building their AI chips. Specifically, the base logic die used in HBM4 and future HBMs will be customized for different AI accelerators. So what does that mean? It simply means that you cannot easily swap Micron's HBM4 memory, which is designed and optimized for Nvidia's Vera Rubin platform, and use the exact same HBM4 for AMD's upcoming MI400 GPU. Moreover, Micron's memory product roadmap will become increasingly aligned with Nvidia's product roadmap and future AI system requirements. This is very important to understand because Nvidia's next-gen AI systems, such as Vera Rubin and Vera Rubin Ultra, are expected to require significantly more memory capacity and bandwidth than current-gen systems. Every new generation of Nvidia AI systems will require substantially higher memory content per system. This will benefit Micron the most. Second, demand for memory is expected to continue exceeding supply over the next 3 to 5 years. For example, according to this estimate from memory analysts, HBM demand is expected to grow much faster than HBM supply over the next 5 years. In fact, HBM demand measured in exabytes is projected to be 3 times higher than available supply by 2030. Why is this important? This trend is extremely important because HBM consumes roughly 3 to 4 times more wafers per bit than traditional DRAM such as DDR5. In other words, every wafer allocated to HBM memory production reduces the amount of wafer capacity available for conventional DRAM. This is why making more HBM actually reduces DRAM supply even more across the broader memory market. There simply is not enough manufacturing capacity to satisfy increasing demand for both HBM and traditional DRAM at the same time. This is why DRAM prices are expected to increase even more in the coming quarters, which will benefit Micron a lot. If you look at this industry forecast from JP Morgan, DRAM bit demand growth rate is expected to be higher than DRAM bit supply growth rates throughout 2026 and 2027. Similarly, NAND bit demand growth rate is expected to remain higher than NAND bit supply growth rates over the next 3 years. However, by 2008, DRAM bit supply growth rate is expected to slightly exceed DRAM bit demand growth rates on a percentage basis. This is because many new memory fabs and capacity expansions are expected to come online and start producing more meaningful wafer output by then. If that happens, memory prices may drop slightly in 2028. However, I do not believe memory prices will drop significantly in 2028. The main reason is that overall memory demand and memory consumption are still expected to be much higher than memory supply. AI inferencing, agentic AI workloads, larger AI models, expanding context windows, and growing KV cache all require significantly more memory and storage. So as long as AI memory demand continues to be higher than supply, memory pricing will remain high at least beyond 2028 or even through 2030, which again will benefit Micron the most. I want to show you two important nuances that explain why memory demand will likely continue exceeding memory supply beyond 2028 and possibly through 2030. Many AI bears believe that memory prices will decline sharply in 2008 because more new fabs will come online and begin producing more meaningful memory wafers by then. I believe this bear thesis is wrong. Here's why. There are two main ways for the memory industry to increase their capacity. The first is memory node migration or moving to more advanced memory nodes. By transitioning memory chips to more advanced process nodes, Micron, Samsung, and SK Hynix can increase memory bits output from the same wafer base. The second is building new greenfield fabs and expanding existing fabs. The biggest challenge is that building new fabs takes a very long time. It typically takes 2 to 3 years to build a new memory fab and another 1 to 2 years to fully ramp production. This is why the memory industry is facing a significant supply constraint right now. New wafer capacities won't come online until the second half of 2027 or 2028. Now, if you combine node migration and new capacity from greenfield fabs, the DRAM makers can only increase their memory bit supply by around 20% to 30% each year. However, AI memory demand has been growing much higher than 30% per year because the latest frontier AI models, AI inferencing, and agentic AI applications all require significantly more memory and storage. This is why I believe memory prices will likely remain high well beyond 2028 and potentially through 2030. Interestingly, Micron's management also said the same thing. That indicates the current memory shortage will likely last much longer than many people anticipate. According to Micron, both DRAM and NAND markets are expected to remain very tight beyond 2027. In DRAM, Micron expects industry bit shipment growth to be in the low to mid 20% range in 2026. In NAND, Micron expects industry bit shipment growth to be approximately 20% in 2026. Micron expects industry supply conditions to improve gradually over time as new capacity comes online. However, management also stated that it does not have line of sight to when memory supply will be able to fully catch up with increasing memory demand. That is a very important statement. It suggests that demand for memory, especially HBM, server DRAM, and enterprise SSDs, will likely continue growing faster than memory supply growth for the next several years. Micron said that future supply growth depends largely on two factors. There are large greenfield fab investments and advanced memory process technologies. As I mentioned earlier, it can take 3 to 5 years to build new fabs and ramp production. At the same time, each new generation of memory technology is delivering slower big growth improvements than in the past. This is why memory prices will likely remain high well beyond 2028 or possibly through 2030. Here is another important trend that explains why memory demand will continue exceeding supply. Nvidia's H100 GPU from 2022 required 80 GB of HBM3 memory. This year, Nvidia's Rubin GPU is expected to require up to 288 GB of HBM4 memory per accelerator. This represents roughly a 3.6x increase in HBM capacity per accelerator in just 5 years. Next year, Nvidia is expected to release the Vera Rubin Ultra platform, which is expected to require as much as 1 TB of HBM4E memory per accelerator. So why is this important? From Rubin to Rubin Ultra platform alone, HBM capacity per accelerator is expected to increase by as much as 3.5x in just one generation. After that, Nvidia will release its next-gen Feynman platform. Feynman's HBM capacity requirements will increase even more. Remember, HBM consumes roughly 3 to 4 times more wafers per bit than conventional DRAM. As a result, the massive increase in HBM capacity per accelerator will put even higher pressure on global DRAM manufacturing capacity. This is why I believe memory prices have become structurally much higher than they were in the past. So contrary to what many investors believe, I do not think memory prices will drop back to the very low prices seen in previous memory cycles because AI, along with increasing demand for HBM, has fundamentally changed the business models of the DRAM makers. Third, Micron is expected to become much less cyclical going forward because AI and strategic customer agreements or SCAs have fundamentally changed the company's business model. Here's why. In the past, the DRAM industry primarily relied on short-term agreements with customers that typically lasted only a few quarters or up to 1 year. Moreover, Micron's business was historically driven mainly by consumer PC and smartphone demand, which is typically much more cyclical. Today, Micron's memory business is being driven by AI infrastructure build-outs and the growing demand for AI accelerators, server CPUs, and AI systems, which are typically much less cyclical than consumer devices. Also, if you look at the big 3 DRAM makers today, you can see that they're signing significantly more long-term agreements with their largest customers. These long-term agreements typically last 3 to 5 years, and they provide much greater visibility into future memory demand. This is a huge shift from previous memory cycles. It shows that memory has become a strategic asset rather than a commodity. As for Micron, the company has already signed 16 SCAs that cover a large portion of its future DRAM and NAND output. According to management, these long-term agreements are expected to contribute as much as 50% of Micron's long-term revenue over the next several years. What makes these agreements so important is that they include minimum purchase commitments, price floors and ceilings, advanced customer deposits, and guaranteed revenues and margins over the next 5 years. This has never happened in the previous memory cycles. More importantly, these provisions will provide Micron much greater visibility into future memory demand compared to previous memory cycles. According to management, these agreements will give Micron margins that are structurally much higher than the margins in the past memory cycles. In other words, Micron's earnings and cash flows will likely become much more stable and higher even when the memory market heads into another downturn. Also, these SCAs, even at minimum pricing levels, will provide Micron with at least $100 billion in revenue over the next 5 years. According to Micron, the actual revenue generated from these SCAs will be significantly higher than $100 billion because memory prices are expected to be higher. Under these SCAs, Micron will receive approximately $22 billion in advanced customer deposits. This shows that customers are committed to purchasing substantially more memory chips from Micron over the next 5 years. The important thing to understand is that these SCAs will give Micron much greater revenue visibility, significantly higher margins than in previous memory cycles, and far more stable revenue and free cash flows over the next 5 years. In the coming quarters, Micron will continue winning more long-term agreements because AI memory demand is expected to remain well above memory supply over the next 5 years. For example, right before I started making this video, Micron announced a major long-term strategic customer agreement with GM that will provide Micron with even greater revenue and demand visibility over the next 3 to 5 years. The leading chip makers such as Nvidia, Apple, AMD, Google, and Broadcom understand that the current memory shortage is likely to persist until at least 2028 and potentially through 2030. That's why they're willing to sign long-term agreements with Micron, Samsung, and SK Hynix. Fourth, the DRAM makers are expected to earn the highest profits in the semiconductor industry over the next 5 years. For example, according to this estimate from Nomura, memory demand is expected to reach 1.4 trillion by 2030. Similarly, according to another estimate from the Bank of America, memory revenue is expected to reach 1.6 trillion by 2030. This will represent nearly a 50% CAGR from 2025 to 2030. This will make memory the fastest growing segment within the semiconductor industry. Let me show you this consensus growth forecast from rankingstock.com. If you look at this projected net income growth for Nvidia, Micron, SK Hynix, and Samsung, you can see that Micron and SK Hynix are expected to generate net income almost comparable to Nvidia's by fiscal 2027. On the other hand, Samsung is expected to generate even higher net income than Nvidia by fiscal 2027. Lastly, the fifth reason to why I'm bullish on Micron is that its forward PE is way too low compared to its expected hyper growth rates over the next 2 years. For example, according to this consensus forecast from rankingstock.com, Micron's revenue is expected to grow approximately 245% year-over-year in fiscal 2026 and around 90% year-over-year in fiscal 2027. Micron's EPS is expected to grow even faster over the next 2 years because of Micron's huge margin expansion and gross margins that could exceed 85% in the coming quarters. On the other hand, Micron's forward PE is expected to fall to around 6 by fiscal 2027. This is extremely low relative to the company's expected growth rates over the next 2 to 3 years. The market is still pricing Micron as a highly cyclical commodity memory business like it was in the past. Micron should be re-rated much higher because it has already become a mission-critical AI infrastructure company like Nvidia, AMD, and Intel. Also, Micron is the only US-based DRAM maker that can compete with Samsung and SK Hynix in advanced DRAM and HBM. Micron is mission-critical for the US government. Now let me show you this very wild tool from rankingstock.com. I always use it to find out whether a stock is likely undervalued, fairly valued, or overvalued. If you like to use this tool to find undervalued stocks, check it out at rankingstock.com. We offer a 7-day free trial. Here's how it works. The orange line represents Micron's estimated fair value over time. The blue line represents the stock price, and the dotted lines are the price targets. Typically, the best time to invest in an outstanding business is when the stock is below its fair value. At the time of making this video, Micron is trading well below its estimated fair value, which is around $1,200 per share. Our price target for Micron is $1,398 per share, while NS average price target is around $1,700 per share. This means Micron is still undervalued now. I also calculated Micron's intrinsic value using my valuation model here. If you'd like to access to this model, you can download it from my Patreon blog. The link is in the video description. Since this video is already getting long, I'll summarize the results here. Based on my calculations, Micron's intrinsic value is approximately $1,188 per share. For comparison, our investing software estimates Micron's fair value around $1,200 per share. This gives Micron an average fair value of roughly $1,195 per share. Based on these estimates, I believe Micron is greatly undervalued now. So will I buy Micron stock? My answer is yes. I actually started buying Micron stock a few months ago when it was deeply undervalued. Now my Micron holding is already one of my largest positions, and it's already a multi-bagger stock in my portfolios. I plan to buy more Micron shares going forward because I believe it's undervalued now compared to its exceptionally high growth rates over the next 2 to 3 years. More importantly, memory, especially HBM, is no longer a commodity. Memory is now a strategic asset. Memory is essential for all types of agentic AI applications, frontier AI models and AI systems. Demand for memory is expected to continue exceeding memory supply over the next 3 to 5 years. As a result, memory prices will likely remain high well beyond 2028 or possibly through 2030. Micron's business will become much more stable and less cyclical going forward because of AI, increasing demand for more memory, and the long-term SCAs I mentioned throughout this video. The big three DRAM makers are expected to earn the most profits in the semiconductor industry over the next 5 years. And lastly, I believe Micron needs to be re-rated much higher in the coming quarters because it has already become a mission-critical AI infrastructure company. Micron is the only DRAM maker in the US that can compete with Samsung and SK Hynix. Now, everything I've shared here is just my opinion and my analysis based on my own research. They are not financial advice. There are always risks with investing, so it's very important to invest in what you truly understand and avoid speculation. Always do your own research and extra due diligence first before making any investment decisions. Thank you for watching and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.